Am I audible? Am I visible?
Yes, sir.
Yes, sir.
Yeah. Okay. Great. Super. So, welcome you all to CAPS say enter R2E sessions. The most required, the most need of the hour, right? Session has come. Revision. I don't know whether it's going to be a revision or whether it's going to be a start in the beginning. We'll have to see. Am I audible?
Yes, sir.
Okay, great. So we have almost kind of like covered the entire syllabus except for one chapter. So revising all the units within the short span of like 2 days or 3 days, whatever we have planned, is quite difficult, right? So we'll try. The objective is to try as much as we can revise and see how it goes, right? It's your participation also plays a crucial role. So let's start with our prayer essay 200.
Overall objectives of independent auditor in the conduct of audit in accordance with standards on auditing.
Essay 210.
Agreeing to the terms of auditing.
Essay 220.
Quality control in an audit of financial statements.
Essay 230.
Audit documentation.
Essay 240.
The
auditor's responsibility relating to fraud in an audit of financial statements.
Essay 250.
Consideration of laws and regulations in an audit of financial statements.
260.
Communication with those charged with governments.
265.
Communicating deficiencies in internal control with charged with governance and management.
300.
Planning an audit of financial statements.
39.
Joint audit of financial statements.
300. 315. Sorry.
Planning an audit of financial statements.
Identify the saying the risk of material statement through
Identifying and assessing the risk of material
through understanding the entity and its environment.
Everybody should tell. People are not telling. It's not for me. Okay, and everybody should turn your videos on. Cannot go on emphasizing this, and it's a revision class. You should turn your videos on. Why it's not on? Don't do on and off. Okay, 320.
Materiality in planning and performing the audit.
330.
Auditor responses assess risk.
To assess risk. Audit considerations relating to an entity using service organization. Evaluation of misstatement identified during the audit.
500.
Audit evidence.
Audit evidence.
1.
Audit evidence specific considerations.
Consider response to directed items.
505.
External confirmation.
520.
Analytical procedures.
audit sampling.
540.
Accounting
Accounting disclosure.
550.
Related parties.
560.
Subsequent events.
20.
Going concern.
Written representations.
100.
Using the work of another auditor.
610.
Using the work of internal auditor.
20.
Using the work of an auditor's
Auditor's expert.
100.
Forming an opinion reporting on financial statements.
105.
modifications in the opinion in the independent auditor's report.
01.
Communicating key audit matters in the independent auditor.
706.
Emphasis of
paragraph in the independent auditor's report.
710.
Comparison corresponding figures and comparative financial
720.
Auditor responsibility to other information.
Other information. Did we miss out on anything? I don't think so. Okay, so let's start with our chapter 1. We started understanding the meaning, nature, objective, and scope of audit. So, what do you mean by audit? Audit is an independent examination of financial information of an entity, irrespective of its size or legal form when such an examination is conducted with a view to express an opinion thereon. So, sir, the term independent is very important. Independence means what? It's the judgment of a person, not subordinate to the wishes of the person who might have engaged him. It is the ability of the person to take decisions without being influenced by anybody. So that is the meaning of the term independence. Now, independence has two limbs. What are they?
Independence in mind, independence in
Mind and appearance.
Independence, and you should unmute yourself and answer quickly. I cannot give you time. Independence, and I'll be going a bit fast. Independence in mind and independence in appearance. Independence in mind is what? Not being affected by anybody's views when he is taking any decisions. Independence in appearance is how the auditor or the person presents himself to the outside public based on his actions, whether people understand whether the independence is compromised or not. That affects your independence in appearance, how you appear. Auditor should remain independent, he should appear to be independent also. So in his actions, he should prove that he is independent. He should not give a feel that users should understand or feel that the independence is compromised. So that is independence in appearance. Examination of financial. So the thing is, the scope of the audit is covering only the financial information of the entity related to financial statements. To be very, very specific and precise, auditor is concerned only with the financial information. Let's say process audits. There are certain deficiencies in processes and systems. Auditor is not concerned about it. Right, is only concerned with the financial information of the entity, and such an audit mechanism is not based on the type of the entity, stature of the entity, or whether the motive of the entity. It's applicable to all forms of entity. What is the purpose or objective? The objective is to express an opinion thereon. The whole examination is conducted with a view to express an opinion. So that is very important. Opinion is different from providing certification. Opinion is what? It is based on the work performed by the person, very, very specific to the activity he has performed and personal in nature. That is what we understand when we talk about the term opinion. But in the context of audit, opinion is, what is the difference between opinion and certification? With the view to express an opinion, with the view to provide certificate, what is the difference? The difference lies in
assurance levels.
assurance which is provided. The opinion, when we give the assurance that we are providing, is lesser as compared to the opinion, I mean the assurance that we give in case of certificates. So the opinion that the auditor expresses is based on the work that he has performed, and if the other person has done the work, he would have given something else. We don't know. It's not like 2 + 2 should be equal to 4 universal. Everybody will come to the same conclusion. But in audit, it may not be. The same audit done by 2 different persons may lead to 2 different conclusions in the end. So that is the meaning of, that is the significance of the term opinion. Now, objectives of audit as per SA 200. We have understood. What is the objective of audit as per SA 200?
To provide
To obtain reasonable
Provide
assurance.
reasonable assurance whether the financial statements as a whole are free from material misstatements, whether due to fraud or error, thereby enabling the auditor to express an opinion as to whether the financial statements are free from material misstatements and are prepared in accordance with applicable financial reporting framework. That is the first objective. The second objective is what?
To follow as per the auditing standards.
To communicate and report in accordance with the requirements of SAs. There are so many areas where we are required to communicate, whether, I mean, we are supposed to do that. That is the objective of audit. So reasonable assurance. What is reasonable assurance?
It is a high level of absolute.
It is high, but not
Absolute.
Absolute
level
assurance.
of assurance. Why is it high just but not absolute?
Because of
To inherent limitations.
Due to inherent limitations to the audit. An audit is having inherent limitations, because of which auditor is not able to convey or pass on absolute assurance on the correctness of financial statements. That is the understanding. Now, what is misstatement?
it
What do you
is
mean by
a
misstatement?
difference between ACPD as per applicable financial reporting framework and ACPD as presented in the financial.
It is a difference between the amount, classification, presentation, and disclosure of an item, of a reported item, and amount, classification, presentation, and disclosure of an item that is required to be reported in accordance with SAs. right? So misstatements can result either due to error or fraud. Both the genesis is error or fraud. The what differentiates an error and fraud?
The
Intention.
intention.
Very good. The intention. Fraud is intentional while errors are unintentional in nature. So auditors are concerned with misstatements. Are they concerned with all possible misstatements? No. They're concerned with only misstatements that are material to the financial statement. So what is material? Anything which has a significance. Anything which influences the decision of the users of the financial statements. That is considered as material. Now, what is applicable financial reporting framework?
The framework adopted by the entity in preparing financial statements, which is applicable to the nature of the entity.
Nature of the entity that is acceptable, that is considered acceptable in view of the nature of the entity and the objective of reporting. The financial reporting framework adopted by the management where appropriate those charged with governance in the preparation and presentation of the financial statements that is considered acceptable in view of the nature of the entity and the objective of reporting. So what financial reporting framework is applicable to the entity is decided by law. For a company which is an listed company is required to comply with Ind AS framework. A small company is required to comply with AS framework. A small company which is a subsidiary of a listed company, though it's a small company, is required to comply with Ind AS framework. So what framework is applicable? A company which is there in US follows US GAAP. Why? Because that is applicable to that entity, considering the nature of the entity and the objective. The objective of reporting is two. One is general purpose financial reporting. Second is special purpose financial reporting. General purpose means what? The financial statements are prepared for the general understanding, for the general use. It is used by all the stakeholders. But special purpose is for a specific purpose or a reason. So the standards that we follow, generally reporting is applicable if it's a general purpose financial statement framework. Right, understanding the applicable financial reporting framework is crucial for the auditor. Why? We have understood it, we'll understand it in subsequent aspects. Then we understood the inherent limitations to the audit makes auditor to provide only reasonable
Reasonable.
assurance and not assurance. I mean, absolute. Why? What are the inherent limitations of the audit? Nature of financial reporting. This is the first one. Nature of financial reporting indicates what? The financial statements are subjected to a lot of estimates and judgments, which may provide differing views or interpretation, making the results varying. If the assumptions change, the numbers change. So there is no specific treatment in the accounting standard. Whenever there is opportunity scope for improvement, there could be a management bias. So these judgments involve subjectivity. These judgments involve uncertainty, which makes the financial statements not absolutely perfect. Right? Even though you do everything, if the assumption itself is wrong, whatever work that you have done correctly also will not give you the right result because the assumptions are themselves wrong. You understand? Point number one. Point number two, nature of audit procedures. See, we say auditor is performing the work even based on certain limitations. First point is what? There are practical and legal limitations on the auditor to obtain information. What is practical limitation? Auditor cannot verify 100% of the transactions due to paucity of time or want of time. Second, legal limitation is what? Auditor is not having any super or special powers if the information is not provided to him. Right? He does not have powers of seizure, powers of confiscation. Right? So, and he's not an expert in authenticating the documents. Some of the information may not be provided to auditor. He will not even be aware of. For an example, a related party transaction. If the entity does not provide it that it is a related party, how will the auditor understand it? Very, very difficult. So all these things makes it difficult to obtain, makes it rather impossible to obtain 100% assurance. Now, sometimes management may not provide information intentionally. Fraud makes it even more difficult. They make it appear that the financial statements are all correct, but in reality, it is not. So these are the inherent limitations with respect to audit procedures. They will not ask you a question, right? The inherent limitations about audit procedures, there are certain practical and legal limitations on the part of the auditor in obtaining evidence. So you have to write these points. You understand?
Yes.
Then
Yes, sir.
audit is not in the nature of investigation. Obviously, investigation and audit are two different dimensions in which the activity would be conducted. Audit starts with the positive mindset. Investigation starts with the suspicious mindset. Audit has less powers. Auditor has lesser powers as compared to investigating authorities, and the outcome is completely different. The objective here is to express opinion. The objective there is to identify where the problem has occurred, why the problem has occurred, who has done this error or fraud. Audit is not investigation. Then there is always a need for us to match between the time and the costs. There should always be a balance between the benefit that we get and the cost that we incur. The cost of audit should not exceed the information benefit that we get, and information diminish over time. So for an example, if I say that there was a pandemic in 2020, you will not value the information as what you were valuing in 2020, correct? No, information also will lose its relevance over time. So you should consider that, and you cannot do audit according to your timelines and schedules. You have to adhere to the entity's reporting requirements. So that makes it practically not possible to do everything, right? So that is one of the inherent limitations. And future events, very important from the exam perspective. Future events may affect the entity adversely. We cannot predict how the entity is going to continue in the future, nor are we giving assurance on the entity's business viability. Auditor is not concerned with entity's share price. Auditor is not concerned with its viability of the project in the future. Future entity non-functioning. This makes it practically impossible to obtain all the information. I mean, 100% assurance on the entity's financial statements. So that those are the inherent limitations to the audit. You got it?
Yes.
Next. So as a practitioner, we can provide lot of activities. So we may provide activities is classified. The activities that we provide is classified based on the level of assurance that we convey. So one, we have audit. Two, we have review. Management. Am I audible now?
Yes, sir.
Yes, sir.
Based on the activity that you perform, as in based on the level of assurance that you pass on to the users, we classify the engagement as audit, review, related service, other assurance engagement. An audit is a reasonable assurance engagement which is conducted or performed on the historical financial information. This is important for you to know. A review is a limited assurance engagement that is also performed on the historical financial information. Review and audit both is performed on the historical financial information, while the other two aspects, which is related service and assurance engagements, may or may not be on the historical. It includes historical information, it includes non-financial information, it includes prospective financial information. All the three. You should make out the difference between examination question, difference between, please make a note, difference between prospective financial information and historical financial information. See, whenever these kind of questions are asked, you should also write from audit's perspective. Okay, so this question is asked, you write what is historical financial information, what is prospective, but you should also write how this engagement will be considered, what opinion you are going to express is something which is important. You understand? So as such, we may not provide any assurance on the correctness if you are doing an example, a compilation engagement. You understand? Compilation engagement means what? You just compile you collate. You add all the data in one place. So an entity may ask you to provide help your assistance in preparing the financial statements, right? So, but in some cases, I mean, that is not an audit. That is not a review either. It's a related service that you are providing. So in some cases, you will also be required to examine prospective. Prospective means what? Future. Now, prospectus of a company, it should include projected financial statement. So when you are verifying that, you're not providing a review. You're providing a assurance engagement. So, and some cases it may be related to non-financial information, like for example, a report on the controls of the entity. You are providing whether the controls of the entity are working well. So they are all the part of your SREs and SAS. So it's important for you to know what comes in SRE, what comes in SAE, and what comes in SRS. We have seen certain examples in MCQs that they will give you an engagement and ask you to identify it will be conducted in accordance with what framework. So it's an audit, review, related service, or assurance engagement. Got it?
Yes.
Yes, sir.
Yes.
This assurance engagement is generally prospective in nature. SAE is all prospective in nature. SRS is non-financial generally. Non-financial, sorry, SRS is specific procedures that you have accepted to do. But SAEs are prospective in nature. Right? So what differentiates from each is the level of assurance. Audit, reasonable, review, limited. The other two provides very limited level of assurance. Even compared to review, it provides lesser assurance levels on the activities. You got it? And then what are the importance of having standards? They are the benchmark. They ensure that your work is aligned to global practices. It helps. It increases the confidence in the stakeholders because you're forming uniform procedures and practices. It ensures quality in the work and helps you to equip skills and knowledge required to conduct the audit. Am I audible?
Yes, sir.
Yes.
Yes. So these are the these are the advantages of having standards in place. Now, who issues standards?
ICAI.
ICI. ICI, under ICI, we have a wing. What wing is that? AASB, Auditing and Assurance Standard Board. Auditing and Assurance Standard Board has issued collective standards. These standards are called Engagement and Quality Control Standards, EQCS. For all the 4 assurance engagements, what is common?
SQC.
Common standard. Am I audible?
There was a lag.
Now am I audible?
Yes.
Yes.
Yes. So SQC1 talks about quality control. So these are the aspects that we have understood. Now, scope of audit, very important. It should cover all the aspects of the entity. Whether the information contained in the records is reliable or sufficient is what we verify. We ensure that the financial statements disclose all the items. Auditor is not expected and cannot do anything which is falling outside the scope of his work. Right? And lastly, there are certain limitations if they are imposed, which causes inability for the auditor to obtain evidence that has to be duly reported. These are the aspects that we need to consider as auditors. Got it? Now, because we provide only reasonable assurance, as we have not conducted the work 100% with 100% accuracy, there is always a risk which is involved. And that risk is called audit risk. What is audit risk? Audit risk is the risk of expressing inappropriate opinion when the financial statements are materially misstated. The definition of audit risk is extremely crucial because it does not include a situation where you have expressed a modified opinion when you are supposed to express an unmodified opinion. That is not considered as audit risk. Only when you are supposed to express a modified opinion, when you're supposed to express modified opinion, but you have expressed unmodified opinion, leads to audit risk. An important point. This is clarified in essay 200 only. The definition of audit risk is provided in essay 200. Am I audible?
Yes, sir.
Is there a lag? You let me know if there is a lag because I'm experiencing a bit of a network jam here. Let me know if you are finding any issues. So got it? So these are the principles that we have understood. Next, we understood This together with chapter number 11, ethics in terms of audit engagement. Right. So, what is ethics? These are a set of moral values and principles that one should apply, one should follow. Moral values, ethos, and principles. These are ethics. As a professional, it is important that you have ethical requirements. You are a professional, so we should adhere to the ethical standards and policies. So professional ethics means what? Ethics that is applied in our profession. So fundamentally, we are obligated, we are in a fiduciary relationship where people put trust on us. So it's important to uphold the principles of professionalism to ensure that we do it in true spirit. Under the aegis of ICI, we have ESB, Ethical Standard Board, which has issued a group of ethical principles which is acceptable, which is required, which requires compliance from the members of the institute, called Code of Ethics. Now, this Code of Ethics is similar to the International Code of Ethics issued by IESBA, International Ethics Standard Board for Accountants. So IESBA is there globally. In India, we have ESB as part of ICI, which issues Code of Ethics, which has recognized fundamental principles to professional ethics. So there are 5 fundamental principles to professional ethics. What are they?
Integrity,
Integrity,
objectivity, professional competence and confidentiality, professional behavior.
Confidentiality. These are the 5 principles. Now, auditor is required to complete the audit according to the timelines. Which aspect is this? Which of the fundamental principles of professional ethics is this?
Professional competence and due care.
Professional competence and due care. He has to perform the work diligently. That means what? He cannot be careless. He should be acting without any negligence. Auditor certifies the financial statements knowingly that there is a misstatement. Which principle is he violated? Is violated integrity. Auditor did not respond to the letters issued by ICAI, did not respond to the notices sent by ICAI.
Professional behavior.
Professional behavior. Auditor was unable to understand the change in the requirements of law and regulation.
Professional competence.
Professional competence and due care. Auditor could not take the decisions without any influence.
Objectivity.
Objectivity. Auditor disclosed information that he has acquired in the course of his professional work.
Confidentiality.
So you can certainly expect questions revolving this area. A little tricky. Please go through a lot of examples which we have solved in the class. Right? So next is independence in mind, independence in appearance. We have understood it very clear. We want to remain independent, but there are certain threats which may not allow us to become, which may not allow us to be independent. There are 5 threats to independence. What are they?
Self-review threat.
Advocacy threat,
Familiarity threat. Auditor is socially known to the entity's personnel. Which threat will it pose? Familiarity. Contingent fee receivable from a client. Self-interest threat. Audit the senior member of the assurance engagement joins the entity.
Self-review threat.
Advocacy.
No.
Familiarity.
Familiarity threat. You did not listen to it carefully. Senior member of the audit engagement joins the client or joins the entity. You know him. It's not a review. It's not advocacy either. Right? A former employee of the entity is part of the assurance engagement team. Is what threat?
Self-review threat.
Self-review threat. See, if auditor goes to the client's end, it poses familiarity. If client comes as part of the audit engagement team, it poses
Self-review.
It possesses a self-review thread, right? Potential employment engagement with the client,
Self-interest.
Self-interest threat.
this thread. Auditor is too sympathetic towards client's interests. Familiarity thread. It's a familiarity thread. Accepting gifts, hospitality extended by the entity is a familiarity thread. Auditor is underwriting the entity shares. Advocacy thread. Auditor is providing a lot of representation services to the client.
Advocacy threat.
Advocacy thread. Auditor was involved in the implementation of the processes which he is performing the audit on.
Self-review threat.
Self-review thread. So these are the examples which you need to be clear and thorough so that you're not confused. You got it?
Yes, sir.
So what we should do if we have threats?
Safeguards.
We should put safeguards, right? We should apply safeguards. So there are certain guiding principles which acts as a safeguard. The first one is auditor should appear to be independent and he should exercise independence in his mind. Second one, if there are any situation or circumstances which involves threats to independence, he should assess them carefully before accepting that audit engagement. Third point, if there are any threats to the independence, he should ensure that these threats are eliminated. If it's not possible for him to eliminate, at least put in place certain safeguards. If he is unable to do that also, then he should not accept such an engagement. At the bare minimum, you should apply safeguards. That is why to avoid these kind of threats only, we have 141 subsection 3 under Companies Act, which provides all the disqualifications, which is because the disqualifications are a result of either one of your threats. Like for example, if the auditor holds shares in the company, what threat will it pose?
Self-interest threat.
Self-interest threat. Auditor has close business relationship with the entity. What threat will it pose?
Familiarity.
Familiarity threat.
No.
Self-interest.
It's again
Self-interest threat.
It is again self-interested. Auditor is providing certain services provided under section 144.
Self-review threat.
Self-review threat. That's why they say if you are providing accounting services, internal audit, management consultancy service, bookkeeping, accounting, actuarial valuation services, you are prohibited from being the auditor of the same entity. So why? Because it poses self-review threat. Right? Auditor, if he continues in the organization for a very long time, what is the problem?
Familiarity.
That's why we have rotation of auditors. So all these provisions are like countermeasure for the threats to independence. So important, an examination question can definitely be expected from this section. Then don't get confused when they ask fundamental principles of professional ethics and threats, because these two concepts go hand in hand. Some situation is given, you may have written fundamental principles, but they will be asking about threats, or you would have written threats, but the question is related to principles. We saw it in class also. You were giving something else, but the requirement was something else. Do you remember? I remember you making an error. That is important. Don't do the same thing in exam. Ensure that you write. See, listen. I mean, read the question carefully. See whether it's about fundamental principles to professional ethics or is it threats to independence. And mind you, independence is not a fundamental principle of professional ethics, right? This is something which is crucial. As an auditor, you are also required to maintain certain qualities. These qualities are not only for an auditor. These qualities is for any successful person in your in life. If to be successful, you should possess leadership quality, tact, patience, temperament, honesty. These are all the things that you should carry. But one unique quality that you should possess as auditor is professional skepticism. What is professional skepticism?
Questioning
Being
mind.
alert and having a questioning mind.
Critical assessment.
Very good. Critical assessment of audit evidence.
Audit evidence.
Three aspects are there. One, having a questioning mind, considering the possibility of misstatements, being alert, and then it's the critical assessment of audit evidence. Right? So what are the advantages? Okay, what are the examples of professional skepticism?
One
When do
audit
you exhibit
evidence,
this?
one audit evidence contradicting the other audit evidence.
Very good. Audit evidence contradicts the other audit evidence obtained. Next.
Conditions that may indicate possible frauds.
Very good. Conditions that may indicate possible fraud.
Decrease in the reliability of the information obtained from the auditing.
Management.
Performing-
Whenever you have questions on the reliability, or whenever you have questions on the integrity of the management, it has a direct effect on the reliability of the information that you are intending to use as audit evidence, and circumstances that may necessitate or warrants the auditor to perform procedures beyond or than those provided in essays. In all these circumstances, you should be more alert and active, should come to active mode. So that is what it says. What are the advantages of being professionally skeptical?
Overlooking the not to overlook.
Not overlooking. It helps you in reducing the risk of overlooking
Unusual
circumstances or information. Overgeneralizing when drawing conclusions. You cannot put everything under the same basket. When you have a misstatement, let's say for that, the misstatement might be exhibiting a bigger picture. Don't simply go by general thumb rule of monetary amount. Right? If the entity has paid fine, that could reveal a lot of other deficiencies in their internal control systems or non-compliance with law, but you're going based on the monetary amount, which is wrong. Right? And then using inappropriate assumptions in determining nature, timing, and extent of audit procedures. Now, for this entity, control testing is important or pertinent, but you have done test of details. Why? Because you did not apply your mind. You were not clear. You were not having that question in mind. Okay, what happens if I were to do test of details? What happens if I were to do test of controls? That thought process should be there. If it's not there, it causes problem. You got it?
Yes, sir.
So these are the advantages of professional skepticism. Now, once we have understood the basics, we move into the entry door. We extend the handshake, right? What is that? Agreeing to the terms of audit engagement. Now, as an auditor and the client, there is a contractual arrangement or agreement between the person providing the assurance engagement and the person availing such assurance engagement. So, assurance engagement is a tripartite arrangement. Tripartite means what? It's a triangle. There is an auditor, there is a user, there is a person or the entity which provides information, or there is a subject matter. Subject matter is there, which is provided by one person. There is an independent person who verifies and provides his opinion on the same or conveys the assurance to users. So it's the relationship, it's the relation between these three parties or items. Right? So auditor should agree, management or entity should agree to the terms of the audit engagement, which is covered in essay 210. Before we understand that, we need to know the difference between management and those charged with governance. What is the difference? What is the difference? Okay, who is considered to be those charged with governance?
The board of directors.
Board of directors is an example, but what do you mean by those charged with governance? Those who are interested with the strategic direction and decision making of the entity, those who oversee the financial reporting process, those who oversee whether the ability of the company is there, ability of the entity is there in continuing in the future. Those who make decisions for the entity, they are considered as those charged with governance. Management is the second tier or second level in the hierarchy who execute the decisions that are taken up by those charged with governance. As an auditor, it's important that these terms of the audit engagement are to be agreed upon by both management as well as those charged with governance. So formally, what do? We enter into an engagement letter before we start the audit. Before even getting into the stage of executing an engagement letter, we first should ensure, are there preconditions for the audit? Preconditions means what? Prerequisites. Like the environment or the conditions, are they favorable or suitable for me to take up the audit engagement? Now, if I say, can you go and live in Antarctica? Will you do? Will you go and live? Not possible, because there are no preconditions for you to go and stay there. The environment, the climate, the other factors makes it not possible for you to go. But if I say, can you go to Singapore? Can you go to New Zealand? You'll say, maybe yeah, maybe no. Depends on what your views and interests are. But given an option, Singapore or Australia, I mean, not Australia, sir. New Antarctica, you'll go to Singapore, right? So because the conditions are favorable, the conditions are there for you to live. So same way, if I have to do the audit, there should be certain conditions that are to be present. Now these conditions are called preconditions for an audit. What are the preconditions for an audit?
The entity has followed the applicable reporting framework in the preparation of financial statements.
Yes. Then
Acknowledgement to the management for its responsibilities.
acknowledgement from the management to the premise on which the audit is conducted. Preparation of financial statements in accordance with applicable financial reporting framework and acknowledgement from the management to the premise on the basis of which audit is conducted is equal to precondition for an audit. These two. So what is the premise? Under audit, what is the premise?
The basis of auditing.
The basis of auditing. What is the basis of auditing?
The responsibility of the management to prepare the financial.
It is the responsibility of the management to prepare the financial statements, not just financial statements, in accordance with applicable financial reporting framework. Should always suffix this, otherwise they will prepare financial statements according to their needs. It's not what law expects. What is the requirement from the law is what we need to consider. Point number one. Point number two, they are responsible for the implementation of internal controls. Third point, they agree to provide the auditor with all the information which management is aware of that is relevant for the preparation and presentation of financial statement. It's not like we are playing treasure hunt or hide and seek. Entity should follow full disclosure principle. Whatever they know about the financial statements, whatever they've considered while preparing, everything should be given to the auditor. Then any additional information that the auditor may request from the management for the purposes of audit, and access, unrestricted access to the persons within the entity from whom the auditor considers it necessary to obtain information. Whenever they say yes, 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 yes for all these items, is when you say the premise is accepted. If the premise is accepted, the next step what I will do, I will check whether FS will be prepared in accordance with AFRF. If that is there, preconditions for an audit is present. That means this is a case for you to accept the audit. Whether I should take up the audit or not is dependent on these two factors. All of you are able to understand this?
Yes, sir.
Yes, sir.
Yes.
Yes, important, very important from exam perspective. A 4 mark or 5 mark question comes in most of the cases. Now, once management agrees, auditor is in agreement, we reduce this in writing. So, how do we reduce it in writing? By preparing an engagement letter. Who prepares the engagement letter?
Auditor.
Auditor.
Auditor. Engagement letter is prepared by the auditor, sent to the client for their acknowledgement.
It is a lag, sir.
Lagging, sir.
Right? So what is it fine now?
Yes, sir.
Yes, sir.
Yes, sir.
Okay. So sometimes videos get stuck in such conditions that it will be so funny for others. Correct, no? Yeah. So Bhavana and Sagar, you got connected because of that. So what are the objectives of, what are the contents of engagement letter? One, it will have the objective and scope of the audit, the responsibilities of the auditor, the responsibilities of the management, the financial reporting framework relevant for the entity, reference to any audit report formats or contents which may be used by the auditor, and circumstances or conditions when the auditor's opinion may be different from what it is conveyed now. Ideally, whenever you start an audit or whenever you enter into an engagement letter with the mindset of giving a modified opinion, will you agree? No. You'll start with the mindset of giving a positive opinion that the financial statements are free from material misstatement. That is what I would convey. But I will also convey that I will change my opinion from this to not correct when I identify these things. When I list out these aspects, it becomes very clear for the management so that they're prepared. So important. What are the contents of engagement letter? So it is a possible question for MCQ, or they ask you a 4-mark question. Please go through that. It's important. Next, what happens if the preconditions for an audit is not present?
Auditors.
Limitations to the scope.
No. This is not limitations to the scope. Understand the question correctly. What will you do if preconditions for an audit is not present?
They should not
We
accept.
do not accept the audit engagement.
Yes, unless required by law or regulation, auditors shall not accept such an engagement. If a law is mandatorily asking you to take up the audit engagement, you cannot say no. You have to do it because you are duty bound. But in all other cases, you should not accept the audit engagement. Now, preconditions for an audit is to be verified ideally at the beginning. You ensure that the entity is complying with what they had agreed upon. If the entity has not complied, or if the entity starts not providing information or not allowing you to do activity, that will lead to what? That will be considered as what?
Limitations to scope of audit.
Limitations to the scope of audit. Now, these limitations on scope, if it is imposed prior to the audit acceptance, what will the auditor do?
Not accept the audit engagement.
No, he will determine whether such a limitation on scope impairs his ability to obtain sufficient and appropriate audit evidence. If such a limitation on scope impairs the ability of the auditor to obtain audit evidence, unless required by law or regulation, he shall not accept such an engagement. Even there, he would intend to communicate, ask the management to remove such limitations. If they are not agreeing on that, or if they are adamant, then you have to keep a point very clear to not to accept such an engagement. Point number 1. Point number 2, what happens if the limitation on scope is imposed post acceptance?
Withdraw from such engagement.
What will you do?
Discuss with the management.
Discuss with them.
First, evaluate the change that is expected or that is required and see if there is a reasonable justification for them to do so. Not all changes are reasonable. Not all changes are justifiable. If the changes are reasonable or justifiable, then the auditor shall evaluate the implication on the nature, timing, and extent of further or other audit procedures. Now, if there are no reasonable justifications for doing so, auditor shall not change shall not agree to such a change or limitation on scope. He should still be very clear that those changes cannot be entertained. Now, whenever there is a limitation on scope, discuss the matter with the management and check if those limitations can be removed or it can be lifted. Second, evaluate the implication of your audit on including the nature, timing, and extent of other audit procedures. If the auditor is unable to, if the auditor concludes that such a limitation impairs his ability to form an opinion on the financial statement, unless required by law or regulation, withdraw from the audit engagement. Else, he has to modify his opinion in accordance with SA 705. You got it? If that limitation on scope completely negates your ability to obtain audit evidence, that means what? You will provide what form of opinion? Disclaimer of opinion, right? You have not obtained any information. Where is there an opportunity for you to conclude whether it's correct or incorrect? So you will provide a disclaimer of opinion. Such an opinion is not the objective within which you start the audit. So withdraw from the engagement whenever law permits you to do so. If the law does not permit, then go ahead and give disclaimer of opinion. In all other cases, consider the other modification, which is qualification or adverse remark. Got it? So now, and can the auditor change the engagement letter from his end?
Yes.
Yes. Whenever he feels that the client has misunderstood the scope, objective of audit, then he may change the terms of the audit engagement. But generally, that is very rare to happen when the auditor himself were to initiate the change. Now, we do the audits continuously. That means what? There is continuity. So these audits are called recurring audits. In case of recurring audits, is there a need for us to enter into engagement letter every year?
No, sir.
No, sir.
No, there is no need for us to engage in, enter into engagement letter every year. So in case of recurring audits, the engagement letter will still be the same. But when will you intend to change the engagement letter?
When there is change in
When there is
terms,
change in the
ownership,
entity's
change in
nature of
management,
business,
Change
change
in
in
Change in the
senior
nature of business,
management,
senior
management,
change in management,
change in the laws,
change in the laws and regulations,
Change in
change in reporting framework,
change in the applicable financial reporting framework. Very good.
change in the term of audit.
Change in the terms of the audit.
scope of audit.
Objective scope of audit, whenever there is a change, no, generally scope is defined. Whenever management misunderstands the scope or the objective of the audit is when you intend to change. And whenever there is a change in the reporting requirements. Now audit reporting format is changed, the additional points have come up. There is a need for me to change the engagement letter also. Now, whenever a law or a regulation applies to an audit engagement, that means what? It in sufficient detail prescribes it prescribes the scope, objective, terms of the audit. Is there a need for the auditor to again mention all these facts in the engagement letter?
No, sir.
No, sir.
No, there is no need for him to repeat those points, except the fact that such a law or a regulation applies to this audit and acknowledgement and confirmation from the entity that they've understood that such a law or a regulation applies and the contents which are provided in those laws and regulations are applicable to the entity is what we need to get the confirmation from. Do you understand what I'm talking?
Yes.
So that is what. So you need not copy paste the same thing again. You say that this law is applicable and take the acceptance from their end that they agree that this law applies and they also know what are the requirements from their end that they have to fulfill. So that is of sufficient compliance. You got it? So this is what is covered in essay 210. Any doubts?
No, sir.
No doubts. Now, whatever work that you perform should adhere to quality. Today, quality is everything. Quality is important. Now, in fact, standards are changing the name. SQC1 is being changed to SQM. Standards in quality control, it's standards in quality management. So it's not controlling, it's the way you look into it. It's managed, you manage the quality. So audit should adhere to quality control standards. So we have two interconnected standards, which is SA220 read with SQC1. What is the difference between SQC1 and SA220?
SQC1 applies for entity as a whole.
Yes.
Very good.
SC220 is for engagement specific.
It is at the engagement level. SQC1 is at the firm level. SQC1 applies to the entire entity. SA220 is applicable to a specific audit engagement. Specific audit engagement. That means what? You will apply this to each audits that you perform. And SQC1 is common for all forms of assurance engagement. SA220 is applicable only for audit. And SQC1 is written on the premise that the entity follows SA220. That is the principle. Got it? No. Don't nod your head. SA220 is written on the premise that entity has followed or fulfilled SQC1. It's like IT general controls are not there, but you expect application controls to be present. If you remember that because it's fresh. Same principle. SA220 is lesser in scope as compared to SQC1. Entity does not follow any quality control practices for the entity as a whole. How can you expect that to be followed for a specific audit engagement? You understand? So SQC1 is written on the premise that the entity has SA220 or SA220 is written on the premise that the entity has SQC1 principles followed. Second statement or first statement?
Second statement.
Statement 2 is right, not statement 1. So this when they may ask you the interrelationship between SQC1 and SA220. So to ensure that the quality is there, work done by one person should be reviewed extensively, reviewed thoroughly, so that mistakes are identified, gaps in the audit are addressed. So we have a system of independent review. So there's a wing in the entity, audit firms, especially applicable to applicable to listed company audits or bigger audits, where every audit should be reviewed by engagement quality control reviewer. He reviews the decisions of the auditor while drawing opinion on the financial statements. He should be independent to the best possible extent. That means what? He should not be engaged in the audit. An engagement quality control reviewer may be internal to the entity, may be external to the entity, but generally they do prefer being an internal person. Entity should have an engagement quality control reviewer who is internal to the entity. You got it? Point
Yes,
number
yes.
one. Point number two, engagement quality control reviewer and the audit engagement partner, can they be same?
No, sir.
No. EQCR is different from the engagement partner. Who is an engagement partner?
Who is responsible?
The audit.
Who is responsible for the overall audit and the expression of opinion? Who leads the audit? Who takes the responsibility for the entire audit? He is called engagement partner, signing partner. Right? He should be different from engagement quality control reviewer. An entity should have a system of engagement quality control review. All the contentious issues, doubts should be resolved before the audit opinion is reached. And firm's policy will always prevail over individuals' views. If engagement quality control reviewer has one view, but the entity follows for a different policy, then obviously the entity's policy will prevail. Same is the case with the auditor. If the auditor wants to take some decision, but the entity has exercised decisions like a different manner in all other cases, then he is also required to follow what the entity follows. He cannot be different. He cannot stand out of the crowd because he represents the firm. It's important to follow whatever principles are there mentioned in the firm's policies. So what are the firm's quality control policies or practices that we have?
Hail me.
H is human resources, E is compliance with ethical requirements, A is acceptance of clients and continuance of relationships, L is and specific engagements, L is leadership, M is monitoring, then E is engagement performance. So first, ethical requirements, I think we all have enough understanding about it. So let's not get into that. But what is required is in case of listed company audits, the auditors are required to provide a statement of independence every year. And at least annually, the audit firm is required to ensure that their audit staff's independence is also considered. They take a statement from the audit staff also that they remain independent of the entities that they are auditing. Otherwise, what we have to do, we have to shift them from that audit to something else. Okay, if you expect even the auditor team also to be independent, like not holding shares, nobody will be able to do the audits. Like a company like Big Fours will have thousands of employees. You cannot expect that these employees should not have shares in the entity that they audit. It says that they should not be engaged in that audit assignment. That's all. It can be a part of the other engagement. So that is what is ethical requirements. If you are unable to satisfy the ethical requirements, then you should withdraw from the engagement. See if you can do it. If you cannot do it, withdraw from the audit engagement. Then we have acceptance of clients and continuance relationships with specific engagements. Three things are to be considered. ICC. What is I? Integrity of the client. Before you accept the client, every person, anybody who walks into your office, you will not make them as your client. Choose your clients. So first evaluate their integrity. Anybody who is involved in fraudulent practices, money laundering, criminal activities, where they are aggressive in their views, or there's a history of frauds which they have committed in the past, these clients, ideally, you should evaluate whether to take it or not. Then C stands for what? Compliance with ethical requirements. Whether are you able to comply with the ethical requirements? Let's say my brother opens a company. Can I become the auditor?
No.
My brother
sir.
opens a partnership firm. Can my brother starts a partnership firm? Can I become the auditor for this firm?
No, sir.
See, legally you can. Why? There is no mandatory prohibition that in a partnership firm the auditor should not be a relative, because what you see in 141 is applicable only to companies. But in true spirit, when I follow code of ethics, can I be independent? Can I comply with the ethical requirements of objectivity? Not possible. So I should not accept such engagement. My brother's audit fine, I cannot take it up. So that's the thing. Then competence. whether you are in the position to do the audit. Competence is from the experience, it's from the resource point of view, and then your understanding of the business, the industry. Also, some auditors are not having any information, any hands-on training on real estate. So they may not be able to do it. Even a real estate company approaches them, they should see if they can do it or not. Otherwise, they should not accept such engagement. So this has to be satisfied first before you accept the audit engagement. Now, with regards to integrity of the matters, that point is important. What are the factors that auditors will consider for evaluating the integrity of the client? So that becomes important from the exam perspective. You got it? And then engagement performance means what? All you need to ensure that consultation is made. When in doubt, consult, seek opinions. Don't think that your decision itself is final. Go back, consult experts, consult seniors. Have an engagement quality control review process effective. Ensure that they are adhered to in true spirit, not just with an intention to comply with the requirements of the law, but follow it in true spirit. When you do that, you can ensure that audit work is adhering to the standards. And then monitoring, important. Certain completed audits, you take it up and then see whether all quality control measures have been applied there. So it's like doing an examination of what you have done in the previous audit files. Got it? Do you understand? Can we move on? Now, if one point in SEPT'25 that we didn't cover is what? Whenever entity requests a change from a reasonable assurance engagement to a lower level of assurance, so how do you deal with that situation? You remember this concept? Now, let's say you are originally appointed to do the audit of financial statements. Midway, halfway through the audit, they say, "Sir, we don't want audit. You are doing so much of extensive procedures, which is causing an interruption to our business. We don't want so much of elaborate procedures and we cannot even afford you." So what you do, you convert it into a review. You do fewer procedures. We don't want, absolute assurance. You provide limited assurance. It's fine. So whenever the change is warranted or the change is initiated, see there is a justification for that. Second, if you accept to convert a reasonable assurance engagement to a lower level of assurance, do not refer to the procedures that you have performed before because it may be confusing for the users when they read. And do not refer to the original engagement letter either. The original engagement letter, if you refer to, users may get confused. Or what is this, an audit or a review? I don't know, because the words that you have used is confusing for them. So stop using all those aspects. You got it? So that is what is important. This is what we discussed in ethics and terms of audit engagement. Are we clear? Yeah. So then we move to understand an important section of documentation. This is the mother standard to all the other standards. So whatever procedures, whatever activities that you perform as an auditor, you should ensure that it is documented properly, which is covered in SA 230 audit documentation. So what is audit documentation?
Record of audit procedures performed, relevant audit evidences obtained, and conclusions reached.
It is a record of the audit procedures performed, audit evidence obtained, and the conclusions the auditor reached. They are also called working papers or work papers. Right? So what is the objective of audit documentation as per SA 230? You should have a sufficient and appropriate record to act as a base for opinion. Your opinion. Am I audible now?
Yes.
Yes.
See, there should be a valid base for your opinion. You cannot say I gave an opinion just like that. There should be a base. That base is audit document. Excuse me. That base is audit documentation. Right? So, and then it should enable the compliance with regulatory requirements. It acts as an evidence that audit was properly planned and performed in accordance with the requirements of SAS. So tomorrow, if someone questions you, how do you say that you have done the audit in accordance with standards? not based on what you explain, it's based on what documents you produce or provide. So that is why SA 230 is important. So what is audit file? Audit file is the place where you store the records, where you store the evidence. This can be a physical file or electronic medium of storage. It can be in the form of a cloud, it can be in the form of paper, it can be in the form of an electronic uh, uh, method of saving the record, folder, files, right? All of them are considered as audit files. Now, when we talk about audit file, we have two: permanent audit file and current audit file. Permanent audit file will include all the charter documents and any legacy documents which are generally expected not to have any changes, right? For an example, MOA, AOA, certificate of incorporation, appointment letter, engagement letter, right? See, these are the things which will not change. So all those things go in permanent file,
Permanent audits.
right? Permanent audit file. So year specific documents will go to current audit file. So year 24, 25, 25, 26, 26, 27, all that is specific to the year under consideration, right? So that is what we have understood. What is the purpose of audit documentation? Why we should maintain audit documentation? It acts as an evidence and for the conclusion that we have reached, to show or to portray or present that the objectives have been achieved, and it acts as an evidence before the regulatory authorities. So that is the purpose of audit documentation. So what are the additional procedures that audit documentation serves? One, it helps you to plan and perform the audit. So you start with the previous work, go to the working papers, previous working papers, and see how it ever have done, what schedules have been prepared, what workings are done. Then it helps you to direct and supervise the work. You have documentation, you prepare a checklist, you prepare some notes, you would have assigned some work, you ensure that weekly meetings are there, everything is recorded, so you can track the progress, measure where you stand. So it helps you to direct and supervise the work, and you can make people responsible for what tasks they are assigned to. If you have documented, like for example, I have entrusted Sana to do the verification of interest calculations. So she will be made responsible if there are any errors. Now, if I don't have this documentation, nobody will take the onus. Well, I ask her to put her initials that she has done the work on this day. So I'm attaching the accountability. That helps. That is a part. And then it acts as the reference for future audits. Some events or transactions that they've entered into this year, it may have an effect in the future year. For example, this year they've entered into a fresh lease agreement for the next 5 years. So the next 5 years also, they will not give you the same document. They say we have already given it in the last year. So it acts as the continuous evidence, source of continuous evidence. And then it helps you to ensure quality control reviews. When EQCR reviews, what will he review? He will review the documents that you provide to him. So for facilitating the reviews, documentation is required, and also for regulatory compliances, for example, peer review, quality reviews, audit documentation is crucial. This is why we need to maintain the audit documentation. Rather, this is the reason why we maintain audit documentation. Got it? Next, what is the form, content, and extent of audit documentation? Very important. So audit documentation should be prepared in such a way, you should maintain your audit documentation in such a way that an experienced auditor, without having a previous connection to the audit, should be able to understand the nature, timing, and extent of audit, the decisions and the results of the audit procedures that you have performed, and significant matters that you encountered during the audit, how these matters were addressed to. All the three aspects needs to be understood by an experienced auditor without your intervention. That's how you should maintain the audit documentation, right? So you need to identify who has performed the work, when was the work performed, when was it reviewed, who reviewed it, characteristics of the engagement, and you need to make summary notes for those matters which is not readily available from the documents. So you should provide cross-referencing, linkings, everything to ensure that you will go back and see, connect why such a decision was excessive, because after 2 years you may have forgotten. You see the number, you see something, some decision, but you cannot match the relation, this number to the decision. So write a note, like I put a sticky note that, oh, this is what it is. So like that, you make summary for those significant judgments so that it becomes easier for you to understand. Now, the form, the content, and the extent of audit documentation is dependent on various factors. This is very important. If at all a question in SA 230 comes, almost 6 to 7 times this question only comes. What are the factors that affects the form, content, and extent of audit documentation? What are the factors that according to you, what are the factors?
Nature and size of entity.
Complexity of the
Nature and size of the entity, complexity of the audit, nature of audit procedures to be performed,
nature and extent of exception.
exceptions. Very good. Nature and if you find lot of variations, lot of misstatements, lot of deviations, it will become more. The file will become big. It becomes 1 MB to 2 MB, 2 MB to 10 MB, 10 to 20. It becomes GBs of data, right? And then it is also based on the risk assessment. If you identify the risk of material misstatement to be high, you intend to collect more evidence.
More evidence.
To reduce your audit risk. So the file also becomes big. And then nature of audit procedures. If you perform internal controls, you maintain audit documentation in one form. If you perform desktop details, you perform audit documentation in another form. The methodology and tools used, we have discussed CAT. If you use computer assisted audit techniques, if you use certain softwares and tools like ACL, IDEA, the way you maintain audit documentation will be different. So the audit tools and methodology that you have performed is also a factor that determines the form, content, and extent of audit documentation. Got it? Important, please go through. You should know this. So what are the examples of audit documentation?
Issue memorandum.
Issues memorandum,
Checklist.
checklist, yes. What about
Analysis.
analysis? Yes.
Audit.
Then
Audit program.
audit program, yes.
Summaries of significant matters.
Correspondences, important email documents, paperwork, correspondences, significant letters of confirmation, letters of representation, right? Then summary of significant matter. This year, this happened. This is the impact. This is the audit application. Affected assertions, audit procedures performed. So that's how you can maintain your audit documentation. Got it? So these are the examples. Now, you need to maintain audit documentation simultaneously. As and when you do the audit procedure, the audit documentation should also be built up. But I will also give you extra time because at times you will say, okay, let me just keep it now, complete it, and then we will take it forward. So I have given a time for you to assemble the audit file. So what is the timeline for the assembly of audit file, final assembly of final audit file?
Within 60 days from the date of auditor's report.
It should not be less, it is not ordinarily should not be more than 60 days. So it should be within 60 days from the date of auditor's report. You should complete the assembly. See, they've used the word completing the assembly. It is not like you start once you sign the audit report. People consider it that way and only start preparing the audit documentation after you sign the audit report. Very bad. You should do it simultaneously. Completion of the done work should be made within 60 days from the date of auditor's report, right? And then assembly of final audit file is only an administrative activity. This per se does not lead to performing any new audit procedure. Administrative activities are like what? What are the administrative activities? Sorry?
Compilation of audit document.
Compilation of audit documentation, yes.
Deleting drafts, superseded.
Deletion of superseded drafts, discarding all the old workings. Sorry?
Sorting, collating,
Yes.
and
Cross-referencing. Very good. Sorting, collating, and cross-referencing. Putting initials, right? Completing checkly. Half-eaten checkly should be completely eaten, and you should wash your hands. Right? That's how you should. It's all administrative in nature, right? So these are the examples that are administrative in nature. Now, SQC1 provides principles. Please be very careful. SQC1 provides this. SQC1 provides the principle for the retention of audit documentation. Up to what period we should retain the audit documentation?
7 years
years.
from the date of audit report.
7 years from the date of auditor's report or the group auditor's report, whichever is later. Now, if the firm has the policy of maintaining the documentation for a longer period, can I maintain it? Yes. If the
Yes.
firm has a shorter period, can I maintain it, reduce it to the shorter period?
No.
No. It has to be maintained for a minimum of 7 years from the date of auditor's report. Then, who is the owner of the audit documentation?
Auditor.
Auditor. So he may, at his discretion, share the portion of or the extracts of the information to others, considering the independence, considering the confidentiality requirements. So a principal auditor of a company, does he have an absolute right over the audit documentation of the branch auditor? Yes or no?
No.
The principal auditor of a company, does he have the absolute right over the audit documentation of the branch auditor?
No.
No.
No. Even though it is a branch auditor, that documentation belongs to him. He can share if he wants to. There is no duty or the obligation on the part of the auditor to share the information because it's his property, right? Then we have something called completion memorandum, also called
Summary of
Audit summary.
audit documentation summary. It is like summary to summary, right? So it considers the summary of the significant matters that were encountered during the audit and how they were addressed. Very important for all the complex matters. So that is what we have to understand. Got it?
Yes, sir.
Yes,
Are we clear? So now, why did we discuss 230 at the beginning itself? Because you should know that you should document everything. Once you complete the audit, if you learn SA 230, you would not have documented so many aspects. That's why we have to learn 230 first. And a very small chapter. I mean, this is the practical approach to it, but examination also, you should read it the same way, but you can read anything in any order now. Okay, so in a small section, but important. Like hardly there are about 10 to 12 pages effectively that you have to read, which fetches you 3 to 4 marks. Right. So now let's move to important plan. A trip to Goa, which will never be executed amongst our friends. So planning and audit of financial statements, essential part of the audit process. Planning is an ongoing activity. It's not a point in time activity. It is a continuous and an iterative process that begins with the conclusion of the previous audit and continues till the current audit is completed, and it goes on. Plans are to be made in such a way they are flexible. They reflect the requirements of the audit. Plans cannot be made theoretically if it cannot be practically implemented. Plans should be pragmatic, realistic, and also flexible. So there are so many activities that we need to consider. Important point, I will not get into it. Advantages of planning. Please go through. Very simple. Why planning needs to be done is a crucial aspect. Second, what are the aspects that we consider in planning? What is that we will consider? The analytical procedures that we want to perform as risk assessment procedures, understanding of the entity, its environment, the regulatory framework, materiality, determining is there a need for me to consider experts in this audit and risk assessment procedures that I intend to perform. It also helps in determining the engagement team. So all those are the components of your planning. Planning has two important limbs. What are they?
Preliminary engagement and planning
activities.
Preliminary engagement activity and planning activity. All of you are sleeping?
No,
No,
sir.
sir.
Preliminary engagement activity consists of what?
ICC.
ITC.
Again, it's ICC. Continuance of client relationship or acceptance of client if it's a new file. Then whether you are in a position to comply with the ethical requirements, and considering whether are you in a position to perform the audit, that is your competence.
Lagging.
Am I audible?
Yes, sir.
Yes, sir.
Am I audible now? Okay. So these are the aspects of preliminary engagements. Now next we have
Planning.
planning activities. Planning activity involves three things. What are they?
Audit plan, audit program, audit strategy.
It should be ulta, no? Developing or establishing overall audit strategy, developing audit plans, and formulating audit program. Though it need not follow the sequential order, but strategy will be established first. What is the objective of establishing strategy? Okay, what is the outcome of preliminary engagement activity? What is it we
Audit
are going to
plan.
achieve? Correct? It helps you to develop audit plans, but what is the objective? It determines the ability of the auditor to plan and perform the audit engagement. Very important. Page number 9 of chapter 2, box. You have made a note. Again, make a note. Now remember to make this a note in your mind. You have made a note in the book. You have to make a note in your mind. So performing preliminary engagement activities helps him in identifying and understanding events and circumstances that may affect his ability to perform the audit. If the integrity of the client is not there, then what happens? Can you continue with the audit? You cannot, right? So that is what the outcome of performing planning activity is. Sorry, preliminary engagement activity. So first one is overall audit strategy. It does three things: STD, scope, timing, and direction of the audit, and it helps you in developing detailed audit plan. So the process of establishing the overall audit strategy mainly focuses or considers the resources. What resources are required? How much of the resources are required? When these resources are to be deployed? And how these resources are to be managed, directed, and supervised. So when you talk about number, quantum, or time factors, everything is related to strategy. Auditor is considering the number of branches that the entity has. What is he trying to do? He's trying to develop audit strategy. So anything to do with the resources is always audit strategy. So remember the focal point as resource and fill your answer with what, why, when, how, where. With the resources, you have gotten the answer to what auditor will do, right? So there are 5 activities under overall audit strategy. First is identify the scope of the engagement. First, you need to have see, to develop strategy, you should know properly what you are doing. If you don't know what you are doing, how can you develop a strategy to win? You're playing a game. If you want to win the game, you should know the game. If you ask me to play a chess, I don't know. I don't know any strategy, any move, because I don't know how to play chess. But a person who knows the chess will know what moves to make. He does a strategy in his mind, right? He also has a counter strategy. If the other person does like that, I will do like this. So how does he do it? Because he has understanding about the game. Same way, you need to understand the scope and audit engagement. You need to ascertain the reporting objectives. Very important from exam perspective. What is the and also all these 5 points? What is the objective? What is that we are going to consider? You should make a note. the paragraphs that are written and the examples under each head, you should glance through. Why? Because in MCQ, they will give you one activity and expect you to pick which part of the audit strategy the auditor is intending to perform. So ascertaining the reporting objectives and consider are there any significant factors in directing the engagement team's efforts. Consider the results of preliminary engagement activity, meaning what? The integrity of the client is not so good. So then you will become more conscious, more skeptical, start doing extensive audit procedures, right? So if you have identified fraud in the past, maybe you will have to change your audit procedures accordingly. So that is the thought process that you are going to give. Do you understand what I'm talking? So then, and ascertain the nature, timing, and extent of the resources required for the audit engagement. Got what I'm trying to say? ಅದರಲ್ಲಿ ಯಾವ್ದು ತುಂಬಾ ಇಂಪಾರ್ಟೆಂಟ್ ಅಂದ್ರೆ ascertaining the reporting objectives. Important. Make a note. Then once you develop strategy, it helps you in developing detailed audit plan. Audit plans are the execution steps of your strategies. It helps you in setting out tasks to execute strategy and accomplish the objectives. It helps you in planning the risk assessment procedures. It helps you in planning the further audit procedures. You got it? Once these plans are established, it's not that plans and strategies have a difference or there's a difference. They're interrelated, they are not contradictory, nor one is superior to the other. Both, nor it has to be followed in the sequential order. Both audit strategy and audit plans are interchangeable in terms of its functions. Change in the plan leads to change in the strategy. Change in the strategy will be reflected in the changed plans. Both of them are required. Strategy establishes the scope, timing, direction. Plans helps you how the strategies are to be implemented. Strategy is less detailed than plans. Generally, strategies are less detailed than plans. Strategies are abstract. Plans are more detailed and elaborative in nature, right? So both of them are required for the effective and efficient functioning of the audit engagement. Did you understand? All of you got it? Yes. Okay. Can you just give me a minute's time? I'll just come back. Just give me a minute. Just take a break for a minute. Don't go. I'll come back. I have to get a charge. Get the charger. That's why. Yeah, I'm back. Can you all please come back? Am I audible?
Yes,
Yes.
sir.
Yes, sir.
Yes, sir.
Am I visible?
Yes.
Yes, sir.
Yes. Okay. So let's continue. So that's the advantage of plans, and that is the relationship between strategy and plans. Once these strategies and plans are developed, what are you going to do? You have to break it down into each task's identifiable task, which is called audit. What do you do next?
Program.
Audit programs. So audit programs are the specific tasks that the auditor is required to develop, and it is in the form of an instruction and series of activities, techniques, and procedures that are to be applied for the purpose of executing and obtaining audit evidence. So important point is the auditor should himself design the audit program, and it's not suitable to develop one audit program for all the audit engagements. For each audit engagement, you need to develop audit plans. It has to be tailor made. It cannot be a standard template. And there are both pros and cons of having audit program, but it is important to have audit program because it provides the advantages outweigh the limitations or the disadvantages of audit program. So you can certainly expect one open-ended question in this area, audit program. So please go through the advantages, disadvantages of audit program, and also please go through auditor to have an open mind, assistant to keep an open mind. Point, evolving one audit program not practicable for all business. Page number 2.19. 8.1 section, 8.2 section is important. And what are the aspects that the auditor should keep in mind while constructing an audit program? Important section from your exams perspective. Please go through. Okay, everything is there in the, it's everything is given in the revision notes in the crisp manner, but that will not replace your study. You cannot only keep revision material and throw your ICI material away. This revision material is no comparison to your ICI material. This is only going to recollect all the topics that you have read. So reading you should have, it should happen from the study material only. That's why I refer to ICI material all the time. Revision notes are there. So it doesn't mean that you should only stick to revision notes. Okay, this is like just like how by drinking boost you cannot survive. By revision notes you cannot survive. You should eat main food. The main food is your material. There is no other replacement for ICI material. I'm underline this point. Barkomudi, there is no material replacement for ICI study material. Bodle Beknila. Okay. So advantages and disadvantages is important. Got it. And off late, the standard, what do you call them? Not able to get the right word. The pattern of ICI exams, if you see, too much emphasis is given on audit program planning strategy because this is a confusing area. It looks very simple, but it's very confusing. What is strategy? What is plan? What is program? And there are a lot of inner points, as in pointers are there. So please go through, spend time in reading audit plans, program strategy, because in one of the exams, it was alone asked for about 20 marks on 70. So you cannot afford to lose that. And any introduction related chapter, you can expect application based analytical. Every exam you see, this planning program, one analytical question will be asked. Say, for example, the Jan 2025, the first question, go and answer. It's from planning chapter. Most of them have not attended that. Like how the May exam, first question relating to audit evidence made available, I still did not get the answer from your end. The question, it is like answer receivable from students, written off or provide for in the books. 100% provision because NPA unsecured. D1 or D2 does not matter. 100% provisioning is required. So I have already made a provision. In fact, my auditors have advised me to write it off as a loss asset. homework receivable, not recoverable, written off. So and they have advised me to account these homeworks on receipt basis. As and when students give their homework is when I should be happy. By giving homework accrual, whenever I give homework, I recognize homework receivable account debit to homework received account. I cannot do it because there are doubts to it. Reasonable certainty, if it is not there, you cannot recognize revenue. So I cannot recognize revenue. Unfortunately, I had recognized revenue. The corrective action is by reversing it, which I have already done. Bank audit NPI recognition is over with the practical example. Okay, so now let's move on with the next concept, which is the hard principle of audit. Right? Audit evidence. What is audit evidence? ಇಷ್ಟು ಸೈಲೆನ್ಸ್ ಒಳ್ಳೆಯದಲ್ಲ. Information used by the auditor in arriving at conclusions on the basis of which auditor's opinion is formed. It is all the information that the auditor collects and he bases his opinion on. The conclusions that he draw, the conclusions that he derive from the information constitutes audit evidence. Audit evidence has two limbs. What are they?
Accounting records.
No, two limbs of audit evidence.
Sufficiency and appropriateness.
Sufficiency and appropriateness. Now the question is, where can you obtain audit evidence from? Where will the audit evidence be? It will be there in underlying accounting records and other information. Examples of underlying accounting records are what?
Vouchers.
Journals, ledgers,
Invoice,
invoices,
contracts.
contract notes, contracts. These are the examples of bank statements. These are the examples of information contained in underlying accounting records. What are the examples of other information?
Minutes.
Minutes of meeting,
confirmation,
chartered documents,
Information.
Trade payables.
Charter documents,
Manuals of
information
Manuals.
provided by employees
Very
of
good.
the entity.
manuals, information provided by the employees, right? Letters of confirmation, letters of
Agreements,
representation.
contracts.
Agreements, contracts are underlying accounting records. Okay, so don't get confused. So audit evidence, sufficiency and appropriateness. What is sufficiency? Sufficiency is the measure of the quality of the audit evidence, right? So that it represents the quality of the information that the auditor has obtained. Got it?
No, sir, quantity.
And quantity.
Quantity. Sufficiency is the measure of the quantity of the audit evidence. It is how much of evidence is required. That is affected by what?
Force and
Sufficiency is
nature.
affected by what? Sufficiency is affected by social nature? No. Sufficiency is affected by MRP. Material. Madhuri always goes to MRP show. So MRP, materiality, risk of material misstatement, size and characteristics of population. If an item is considered to be material, you collect more information. If an item is considered to have higher risk of material misstatement, you take more and more evidence. If the population, the size of the population has very limited role, but the characteristic of the population plays a crucial role. If it is a heterogeneous population, you intend to take lesser information. If it's homogeneous, you take more.
No, sir.
It's ulta.
Ulta.
Heterogeneous, yeah, I know. If it's heterogeneous, it's more. If it's homogeneous, it's going to be less. That is sufficiency. What is appropriateness?
Relevance
Quality of
and
the audit
Measure of
relevance.
quality of evidence.
Very good. It's
Measure
the
of
measure of
quality
the
of
quality of the evidence, that is its relevance and reliability. So what do you mean by reliability? The ability to believe the documents, the ability to go ahead with the information provided. The reliability of the audit evidence is affected by what?
Source and
nature.
By source and nature. When we talk about source of audit evidence, we have broadly two sources. What are they?
Internal sources and external sources.
Internal source and external source. Now, Credit note issued by the entity is an example of what evidence? Internal, external.
Internal source.
Internal.
Credit note issued to the entity.
External source.
External.
External. Bank statement.
External.
External. Sales invoices.
Internal.
Internal.
Internal. GRN.
Internal.
Internal. Purchase invoices.
Internal.
External.
External.
Purchase invoices are external evidence, right? Purchase orders received by the entity.
External.
External. Sales order made by the entity.
Internal.
Internal.
Internal. The ultimate principle is who is preparing the document. Vouchers.
Internal.
Internal, external.
Internal.
Internal evidence. Right? So from where these documents are prepared is what makes us internal or external. Which one of the two, which one is more reliable?
External.
External information is more reliable than internal information. So we can make, while we recognize the generalizations about the audit evidence that external evidence is more reliable, another important point that we need to consider is internal information is also reliable when
It's serially numbered.
when it is serially numbered. Yes, correct. But
When
what does
controls
that
are
mean?
stronger.
Very good. When controls over the preparation of such documents are strong and effective, the reliability on the internal evidence is also going to increase. In some occasions or circumstances, external evidence may not be reliable. When the auditor has identified that the external information is not correct, or when there are fraudulent activities that he has noticed, or when there is a related party transaction, auditor will become cautious and careful. So all these are the generic principle is what? Evidence which is obtained from external sources is always reliable. Evidences that are obtained by the auditor directly is more reliable. Evidence that are in the documentary form is more reliable. Evidence that is obtained through original documents is more reliable than the photocopied or facsimiled ones. Evidences that are obtained from internal sources is reliable when their controls over its preparation are strong. So that is reliability. So we have made a chart, I2I, E2E, E2I, all those possible parameters is what determines the hierarchy. It means the level of reliability that you can place on, right? So observation gives more reliable audit evidence or inspection gives more reliable audit evidence?
Inspection.
Observation.
It's actually observation. What the auditor is getting directly is its visual evidence, right? So it will be more reliable. And ಕಣ್ ಮುಂದೆನೆ ನೋಡ್ತಾ ಇದೀನಿ, ನಿದ್ದೆ ಮಾಡ್ತಾ ಇರೋದು ನೀವು, ಬೇರೆ ಏನ್ ಬೇಕು ಅದಕ್ಕಿಂತ, ರೈಟ್? ಸೊ ಚರಣ್ ಪಾಪ ಮಲ್ಕೊಂಡಿದ್ದಾನೆ, ನಾನೇ ನೋಡಿದ್ದೀನಿ. ಸೊ ಅದಕ್ಕಿಂತ ಬೇರೆ ಏನು ಎವಿಡೆನ್ಸ್ ಬೇಕು? ದಟ್ ಐ ವಿಲ್ ಬಿಲೀವ್ ದಟ್ ಮೋರ್ than what Bhavana has messaged me. Sir, see, Charan is sleeping from the beginning. So that is an inference. What I see is more reliable. You got it? So that is the reliability. Now what is relevance? Papa Yadru Sayabru. Jana Saktra. What is relevance?
The logical connection between the evidence and the audit procedure and the assertion being
Very
present.
good. Very good. Super. It is the logical connection, the bearing of the activity to the objective. That is relevance. The evidence that I collect should meet or match my preference. Preference here means coffee or tea, Allah. It's the objective that I want and the assertions that are addressed. This is where we understood the principal concept of assertion. Relevance is directly linked to the assertions that we are going to address. What are assertions?
Representations made by the
management.
Implicit or implicit.
that are present in the entity's financial statement.
And it is used by the auditor for what? To identify potential misstatements. Assertions are the representations made by the auditor explicit or otherwise,
Made by the
that are
management.
Made
embodied
by the
Made by the
auditors, made
management.
by the audit.
Management.
ಒಂಥರದ ಲ್ಯಾಗ್ ಜಾಸ್ತಿ ನಿಮ್ಮಲ್ಲಿ. ಹೇಳು ಒಂದು 4 ಲೈನ್ ಆದ್ಮೇಲೆ ನಾವು ರಿಯಲೈಸ್ ಮಾಡ್ಕೊಂತೀರಾ. ಬಟ್ ಗುಡ್, ಟ್ಯೂಬ್ಲೈಟ್ ಆದ್ರೂ ಲೈಟ್ ಬೆಳಕ್ ಚೆನ್ನಾಗೇ ಬರುತ್ತೆ. Assertions are the representations made by the management, explicit or implicit, that are embodied in the financial statements and are used by the auditor to identify potential misstatements. Now, explicit assertions means what? Something which is clearly stated. We do not have contingent liabilities. There are no Benami transactions initiated. There are no proceedings under the Benami Prohibition Transactions Act initiated against our company. There are no funds that are transferred to other entity with a view to onward make investments in someone else, like ultimate beneficiary, 11E. Right? So these are explicit assertions. The entity has prepared the financial statements in accordance with the historical cost concept under the going concern assumption with the accrual basis of accounting. It's an explicit assertion. What is an implicit assertion or implied assertion? These assertions are also encountered, which need not be conveyed specifically, but is understood as such. If I don't see buildings in the financial statements, that is implied that the entity do not have buildings. If I don't see borrowings, that means the entity do not have borrowings. Right? So that those are explicit assertions and implicit assertions. Assertions can be positive assertions or negative assertions. Can you give an example of a negative assertion? Example of a negative assertion.
That Benami
If you don't see
transactions
buildings,
do not are not
yes,
present.
there are no transactions. Yes. Then the entity is not a willful defaulter. If I make the statement, it's an expressly stated negative assertion. We do not have contingent liabilities. We do not have debts. When they make the statement, it's an expressly stated negative assertion. Implied assertions can be both positive and negative. When they say land, that means they explicitly said that there is land and that land belongs to the entity. So the relevance is affected by the assertions that are being tested. Now, assertions are at 3 levels. Assertions are about what? About class of transaction, about account balances, about presentation and disclosure. So assertions about class of transactions are how much or what? What are the assertions about it?
Occurrence, completeness, accuracy, cutoff, and classification.
Classification. Very good. What are the assertions about account balances?
Existence,
Existence, rights and
Needs
obligations,
and obligations, valuation,
Completeness,
valuation,
valuation. Right? And then presentation and disclosure is a combination of both. Right? So whether provision for bad debts is maintained by the entity or not, if the auditor wants to test, which assertion is it?
Valuation.
Very good. Valuation. Aging analysis of trade receivables.
Valuation.
Valuation. Search for unrecorded items in the balance sheet.
existence,
Completeness. It's about completeness. Transactions that are accounted by the entity belongs to the entity.
occurrence,
Occurrence. Right? All the amounts are stated appropriately.
occurrence,
All the amounts are stated appropriately.
completeness,
It's accuracy. Yeah. All the amounts are stated appropriately. ಅಲ್ಲಿ ಎಲ್ಲ ಅಮೌಂಟ್ಸ್ ಮೆನ್ಷನ್ ಮಾಡಿರೋದು ಕರೆಕ್ಟ್ ಆಗಿದೆ ಅಂತ ಎಲ್ಲಾನು ರೆಕಾರ್ಡ್ ಆಗಿದೆ ಅಂತ ಹೇಳ್ತಾ ಇಲ್ಲ ನಾನು. ಸೊ ಇಟ್ಸ್ ಅಬೌಟ್ ಅಕ್ಯುರಸಿ. ಅಕ್ಯುರಸಿಗೆ ಕೀವರ್ಡ್ ಏನು? ಅಪ್ರೋಪ್ರಿಯೇಟ್ನೆಸ್. ಅಪ್ರೋಪ್ರಿಯೇಟ್ ಆಗಿದೆ. ಅಮೌಂಟ್ಸ್ ಆರ್ ರೈಟ್ ಅಮೌಂಟ್ಸ್. ದಟ್ ಇಸ್ ಅಪ್ರೋಪ್ರಿಯೇಟ್ನೆಸ್. ಓಕೆ. ಸೊ ಅಸರ್ಷನ್ಸ್ ಮೇಲೆ ಸುಮಾರು ಕ್ವೆಶ್ಚನ್ಸ್ ಆನ್ಸರ್ ಮಾಡಿದೀವಿ ನಾವು. Right? Whether staff welfare expenses have been classified under right heads. Classification. Right? Purchase invoices are in the name of the entity. Auditor is verifying whether purchase invoices are in the name of the entity. Which assertion?
an obligation.
Obligation.
Which one?
Occurrence.
Exist.
See, purchase ಅಂತ ಹೇಳಿದೆ ನಾನು. Purchase ಅಂದ್ರೆ ಯಾವುದು?
Class of
Class of
Class of
transaction. Existence ಗೆ ಆಪರ್ಚುನಿಟಿನ ಕೊಡಬಾರ್ದು ನೀವು. Rights ಗೆ ಆಪರ್ಚುನಿಟಿನ ಕೊಡಬಾರ್ದು. It is about P&L. It means what? It is about occurrence. You got it? All the
Yes,
fixed assets all the fixed assets that are held in the name of the entity are evidenced by way of a purchase invoice.
Rights
Rights
and
and
obligation.
Rights and obligation.
Rights and obligation. External confirmation of trade receivables is performed to address which assertion? External confirmation.
Existence.
Its existence. Existence. Abhay, are you there?
Yes, sir.
He's saying is yes. That means, does he exist in the class? He exists in the class. I don't know whether he is listening to the class, but does Abhay exist in the class? Yes.
Sir.
So when you ask confirm, you are listening, man. I know you listen more than what I speak. Good example, man. Don't take it seriously. See, if you ask the third party to confirm whether the amounts are right or wrong, it doesn't matter. At least the party is there. Correct? No, the party is there is what we have been able to trace and map. All the inventories held by the entity at multiple locations are recorded in the financial statements.
Completeness.
Completeness, right? All the inventories recorded in the financial statements pertain only to the entity, and inventories that are related to third parties are not recorded. Which assertion?
rights and
obligation.
Rights and obligation. Bearer inventory, non inventory ಅಂದ್ರೆ ಬೇರೆಯವರು ಓದಿತಾರೆ. Do I possess the right? No. Right? So this is what we need to understand. Auditor is trying to verify the gross profits, analysis of the gross profits of the entity.
Valuation.
Valuation assertion. Right? So this is assertions. As such, they will not ask questions. So remember, in Caro also, fixed assets, we have the title deeds disclosed in the financial statements are held in the name of the company. Is that addressing which assertion?
Rights and obligations.
Rights and obligations. All the title deeds held by the company are disclosed in the financial statements.
Completeness.
It is completeness. It is completeness, majorly, right? All sales are evidenced by sales invoices. Occurrence. Sale has happened, it has to be evidenced by an invoice, right? So it's occurrence. So like this, you can expect some questions. And there is one example which is given in material, that plant and machinery, accumulated depreciation, right? What are the assertions that are behind that is what you need to review. 1 minute. Just give me a minute. Minute ginta kadame. Some seconds. Okay, am I emanating light?
Yes.
The radiance.
Yes.
The knowledge. You see, one advertisement was there, very old advertisement. A Buddhist student will actually sit and he will start meditating. Before at his back, a light starts throwing up. It's like that enlightenment light which shows. People will fall for his feet. People think that he's enlightened, but it's actually the tube light which was there. That was an advertisement to promote the bulb. So that's how it is. So anyway, no problem. As long as you are getting knowledge, the light is getting transmitted, I'm happy. Okay, so relevance is all about assertions. Yes, please.
Gross profit pertains to P&L item, right, sir?
Correct. But with what perspective you are doing? See, you generally verify gross profit to see if stock is correctly valued. Because if their stock is not correctly valued, then it is affected by it is going to affect your GP. You can also say omission for purchases, omission for sales, and other things, but predominantly it's valuation, you can say. Right? What item you are taking in the context you can answer.
Okay.
Yeah. So these are the assertions. Go through the description of each assertion. So the concept gets registered in your mind. So now sufficiency and appropriateness. What are the techniques? So auditor is required to apply certain procedures. So let's discuss this. Procedures to perform audit. Broadly, we have two procedures. What are they?
Risk assessment procedures
Yes.
and
And ಫರ್ದರ್ ಇದಕ್ಕೆ ಪಾಪ ಸ್ಟ್ರಗಲ್ ಮಾಡ್ತಿದಾರೆ ನಮ್ಮ ಹುಡುಗರು ಇದನ್ನ ಹೇಳೋದಕ್ಕೆ ಇದೆಲ್ಲ ಹೆಂಗ್ ಹೇಳ್ಬೇಕು ಕೇಳಕ್ ಕ್ವಶನ್ ಕಂಪ್ಲೀಟ್ ಆಗಕ್ ಮುಂಚೆನೆ ಆನ್ಸರ್ ಹೇಳಿರ್ಬೇಕು ಬಟ್ ಇವ್ರು ಬಿಸಿ ಪಾಪ ಒಂದ್ ಅರ್ಧ ಜನ ತಿನ್ನೋದ್ರಲ್ಲೇ ಬಿಸಿ ಉತ್ತರ ಕೊಡಕ್ ಮೌತ್ ಇಸ್ ಆಕ್ಯುಪೈಡ್ risk assessment procedures and further audit procedures. Now risk assessment procedures are performed at the overall financial statements level and at the assertion level. Further audit procedures are performed at the assertion level only. Don't add and financial statements level thinking that they will give half a mark if you write more. ಬರ ಹಾಫ್ ಮಾರ್ಕ್ ಹೊಟ್ಟೋಗುತ್ತೆ ಬರದೇ ಇಷ್ಟು ಅದನ್ನು ಕಳ್ಕೊಬೇಡಿ ಓಕೆನಾ ಎಕ್ಸ್ಟ್ರಾ ಬರ್ದು ಹಾಳು ಮಾಡಬೇಡಿ ಆನ್ಸರ್ನ ಅಲ್ಲಿ ತನಕ ಇದ್ದಿದ್ರೆ ಸಾಕು okay so now these risk assessment procedures are the audit procedures that are performed to identify and assess the risk of material misstatement that may cause the financial statements to contain material misstatement through understanding the entity and its environment, including entity's internal control. So what is the outcome of performing risk assessment procedures?
Nature, timing, and extent of further audit procedures.
It helps you to determine the nature, timing, and extent of further audit procedures to be performed. Very important activity, right? Once you perform the risk assessment procedures, what do?
further audit
You
procedures.
start providing responses to the assessed risk. So that is when the 330 concept comes into picture. The classification, the chart that we have written in our notebook and comfortably forgotten without any efforts is based on the principle of 330, not based on 500. The chart is not coming from 500. It is coming from, though it has come from my mouth, it has come through my mouth from SA 330. I'm the medium of exchange. That's all. So further audit procedures are divided into two. What are they?
Test of control.
Compliance.
Test of controls and substantive audit procedures.
Test of controls, also called compliance procedures, and substantive procedures. Test of controls are performed to identify, to evaluate the operating effectiveness of the controls at the assertion level. The objective is to verify whether the controls are working effectively. When I say the controls are working effectively, it means the ability of the controls to what?
Prevent,
Detect, and correct
Detect and correct material
material
misstatements on a timely basis. Right? So what are substantive procedures? These are the audit procedures that are designed to detect misstatements at assertion level. Right? So there are two. One is test of details and substantive analytical procedures. Test of details are divided into two: test of transactions, test of balances. Test of transactions is basically verification of P&L. Test of balances is verifying your balance sheet. Test of transactions is called vouching. Test of balances is called verification. Right? So substantive analytical procedures are performed depending on the requirements. It's not a must, but he has to perform if he finds it important. Now, of the two further audit procedures, which one is compulsory?
Substantive.
control is mandatory.
Substantive procedures is a must. Irrespective of the auditor's assessment of risk of material misstatement, performing substantive procedures
Lagging, sir.
is a must. क्योंकि भी कभी बहू थी इसीलिए. Yeah, I know. Must. Hello. Hello. Am I audible?
Yes, sir.
Yes. Why performing, irrespective of auditor's assessment of risk of material misstatement, why performing substantive procedures is a must?
It is the point where we detect the mistake.
It is the audit procedure that detects the misstatements at the assertion level. The objective of the audit is to detect the misstatements and thereby draw opinion whether the FS is free from material misstatement or not. Hence, it's important. And risk of material misstatement is a judgmental activity and it may not identify all errors. Depending on the circumstances, auditor may decide whether performing test of details or analytical procedures are more pertinent. Irrespective of what test he wants to do, performing substantive procedure is a must. But test of control is discretionary when the auditor intends to place reliance on the internal controls, when the auditor's risk assessment takes into consideration the effectiveness of the internal controls, then only auditor would test the controls. And if the auditor's results of performing test of controls is found to be not satisfactory, then he has to do substantive procedures. All these things makes it imperative for the auditor to to perform substantive procedures. Got it? All of you understand? To execute these procedures, we do certain activities, series of activities that is called techniques. So what are the techniques to obtain audit evidence?
Inspection,
Inquiry,
observation,
Inquiry,
performance,
internal
recalculation.
confirmation,
recalculation, external confirmation. Though analytical procedure is written in the book, we say no. Right? Inspection is what? It is the verification of the records and documents of the entity. In some context, it is also the verification of assets. If you see your material, it is clearly mentioned that verification of assets is also considered as inspect. You inspect inventory. You inspect the site, you go and see, right? Then observation, it's the visual evidence that the auditor, when he wants to understand the process, when he wants to understand how a control, application of a control, he generally performs observation. But the problem is observation provides very limited audit evidence, and the fact that the audit is observing makes the evidence a bit fabricated. Right? Then inquiry, the most easiest form of obtaining audit evidence is performing inquiry. What does inquiry consist of? Inquiry is a process of asking questions, seeking information from the knowledgeable person within the entity. The major activity in inquiry is evaluating the responses to the inquiry. When the auditor starts evaluating the responses to the inquiry, he may get a corroborative audit evidence or he may get contradictory audit evidence. When the auditor obtains contradictory information, then he should examine, he should investigate further. Right? Recalculation, verification of the numbers, reperformance is carrying out the procedure again by the auditor. So these are the techniques. So you may expect one question, what technique the auditor is trying to do. Auditor is verifying whether BRS is made by the entity or not. Which audit technique is this?
Reperformance.
Very good. It's reperformance. Auditor is verifying title deeds of immovable property.
inspection,
Inspection. Auditor is attending the physical verification of fixed assets.
observation,
Observation. Auditor is verifying whether the depreciation calculation is correct.
recalculation,
Recalculation. So these are the techniques that we have. What technique we should apply is based on the objective, is based on the type of audit evidence we obtain. Now, when we talk about reliability, it is affected by source and nature. Nature of audit evidence means what? Oral, visual, documentary. Right? Oral documents, inquiries, visual document, like observing a process or a procedure, documentary evidence. A substantial portion of your evidences are in the documentary form, email correspondence, sale deeds, invoices, contracts, agreements, arrangements, financial statements. Everything is a part of audit evidence. Got it?
Yes, sir.
Yeah. No, you should listen all the words. Financial statement is not audit evidence. I intentionally add few words to see if you're listening. Financial statements is not audit evidence. Financial statements are not assertions. Okay. Financial statement is a subject matter. You cannot consider it to be an assertion or audit evidence either. Got it?
Yes, sir.
You understand? Yes. So next is, can we use the evidence that we obtained previously? Yes. Especially with regards to controls, we have discussed even in risk assessment procedures that sometimes evidences that are obtained in the previous financial years may be still relevant and we continue to use the same. It depends on the effectiveness of the IT general controls. It depends on the circumstances in which these controls are implemented, the control environment. Are there any significant deficiencies in the controls that we have noticed? Is there any changes that are there, but the entity has not affected these changes? All those factors would be considered as part of the assessment or evaluation. Got it? So these are the concepts that we have understood with respect to audit evidence. So what we do is we will take up the subsequent discussions of evidence chapter in our next revision session. That is tomorrow, right? So what is your next, I mean, what class you have now?
On 7:30 you have
Costing.
7:30 you have costing,
Yes, sir.
no?
Yes.
Costing by?
Aman sir.
Aman, sir.
All portions are done? Costing?
Only last
Last
one.
three
Last
chapters.
Last 3 chapters, huh?
Yes.
2 by Shetty, sir.
Okay, no, there is some differences of opinion. I don't want to get into this aspect because you're not very clear. Papa gottilla. I understand syllabus papa ide. No problem. So you enjoy the rest of your day. You eat if you, those who have not eaten in this class, and
Yes,
those
sir.
who don't eat in Aman sir's class, you sleep only if you have not slept now or in Aman sir's class. Thank you. Have a great day. Bye.
Thank you,
Thank
sir.
you, sir.
Sir.
Bye,
Bye. Bye. Good day. Bye. Bye. Bye.